Hello, hello, hello. Happy Wednesday, everyone. How is everyone doing today? Good morning, Patrick. Sterling with the news. Let me scroll through and find who's in here. There's Sterling. Thank you for putting in all the news, Sterling. Good morning, Alan. Yeah, ADP numbers came in worse than expected, but I don't pay much attention to that. That thing's all over the place. Non-farm payrolls and there's no correlation really with it. Good morning, Options 22. Remember, non-farm payrolls on Friday. Jacob, good morning. What was that? Well, yeah, mortgage rates through the roof. Tony, good morning. Uh, did anyone catch the 1 hour head and shoulders on the 10-year yield? You missed it, Sterling? Well, you can't catch every trade. Uh, all right. What do we got going on today? There's actually some important numbers coming out. 8:45, we have global composite and S&P Global Services PMI numbers. Still expected to be slightly in expansion, but watch if they drop below 50. ISM services, which is the more important one. Also watch the employment component of that and the prices component of that. That comes out at 9, so 30 minutes after the cash open. And we have Fed Schmidt speaking, Goolsby speaking, Bowman speaking. Yay, lots of Fed speak. And of course, the EIA crude numbers. Crude pulling back finally nicely. Still watching for a bigger pullback into that weekly rotation zone. So, good morning, Royal Palms. So far, Apple pulling back. Tim Cook sold a bunch of stock and got I forgot it was a minor from downgraded, but the rest of the techs are sort of stronger. Uh, Oil, of course, energy stocks pulling back. Groups, real estate with the drop in the 10-year yield in the 30 years pulling back is leading today, then comm services technology. So it looks like more of a risk on day, and energy pulling back, as we already said, or as I already said. Nothing's really changed. Stay in pause mode through June. Fear and greed, still in extreme greed. So when we get down here, I do watch for bottoms, and we've hit some key levels. So let's take a look at that. Nothing in terms of earnings, just to be point of completeness, unless you're really watching Tilray. So let's see where we sit. We came down to the first target, or the second target, this 42.36 area. Some people also had some Elliott wave areas down there. I am really watching. We had a pretty strong reversal at the European Open. So even if we come back down test this area, I'm going to be watching to see if we form a shorter term bottoming pattern and get some follow through here. Key area I'm watching in the near term. You see we have the declining rotation zone. We have the 200. Let me just pull this channel off because we're below it. Let me just check this, see how far below it we are. It's not going to be as important now. We pretty much broke it to the downside, but more importantly, I'm going to be paying attention to the areas about 4,300 to about 4,320 in the short term. We get a close above 43.20.25. Then the major area I'll be paying attention to see if it can get all the way back to up towards the 50 EMA and possibly the 44.59. The interim levels before that, it would be about 44.16 would be the key area. So that's how I ratchet up there. But in the short term, in order to prove itself, it's got to get through this 43.20. On a rollover, we don't really have a solid pausing bar on the daily yet, but if it for something happens and we blow through, and we blow through yesterday's low, the best we can do for harmonics at this point would be about 42.18, then 42.01. And then we got 41.71. I'm not expecting that, but remember, we have to always prepare for both sides. We are coming down to like this oversold condition. We have cycles sort of got to the top on the daily, but on the weekly, we're getting to that bottoming area. So I'm watching it. It doesn't have to fully put in just a sharp rally, but I'm watching for more of a bottoming formation to be put in, especially possibly with non-farm payrolls coming up on Friday. We'll see. Again, if we continue lower, this got a lot of heavy lifting now to do. Or yes, we will get a bounce at some time. I'm watching for that, especially with the weekly cycles getting nearer to the bottom. However, then it's got a lot of heavy lifting to get through to the upside. Bounce more like an ES at 200. Well, on the back adjusted, it's below the 200. On the non-back adjusted, it's right here. And this is an area. This is an area, keep in mind. So it doesn't have to tap the 200 right here exactly. And even if it rolled over and tapped the 200, it could be setting up for a little mini double. All right, just keep that in mind right there. But this is an area with whatever chart you're looking at that's going to be pretty key. Good morning, Anissa. So, and also remember, we do have the big numbers. The big number this week is non-farm payrolls on Friday morning at 7:30 Central. NASDAQ, we do have, you can see it here, a double bottom. The little front run thing would be if I was looking for a front run pattern, I'd be watching 14,873 on a closing basis. 14,816, then 14,873 are the key levels to the upside. You start getting in, that could even be done with a 4-hour close. About 14,873 could be a little front run. If you're trying to learn other techniques, if you're trying to front run a pattern, that could be valid right now. It's a pretty much perfect double bottom. And where could that take us? 15,298, so 15,300. 15,416, and then 15,533. What's interesting is if we go back to the whole sell-off retracements, that just takes us potentially between the 50 and the 62.5, where I'd start watching for the next substantial rollover play. And if you're playing along at home, you also have a declining significant trend line up there. So if this can get a more sustained bounce coming in, this would be a very key target area that I would be utilizing if it can continue. And it doesn't mean the probabilities are higher because you have multiple things in that area. It just means it's a very strong target area. And remember, probabilities are not additive. So that's what I'll be watching. Now, again, I can still use this other reverse harmonic. So if we do take out today's low and the low from September 27th, the minor area would be 14,526. The major target area would be 14,440 to 14,467. Below that, we're still with about 14,288, but I'd be looking for that target on the next rollover play for structuring a trade. Let's see, a little gunk on my mouse. There it goes. So coming down, hitting the harmonic, hitting the 50%, a little 50% retracement from the up move. That might be slightly off. Hold on. Let's see. There we go. Coming really close to 50% retracement from the up move. So the Dow has not have a super bullish pattern just yet. But the first thing that the Dow's got to get through on the most recent swing down is it's got to get a close above 13,712, and the first area of major resistance is about 33,712 and 13,574. The Dow's been pretty weak, but it's still watching for it to carve out a bottom also. Keep an eye on these 4-hour rotation zones, by the way. If we do break down from here, again, 32,959. And let's see what else we have. And then got a fair amount of support, even down at about 32,700. 32,700. If it breaks down, I'd actually raise that level up a bit. right around, okay, close enough. Russell, the key area to start getting some traction going on any bounce is 1787.3 on a closing basis. The key resistance it's got to get through initially is about 1775. So that's it. To the downside, there is a lot of support in here. Remember, this is support from last September and October. So on any sell-off, 1710. If we were to bust through 1710 in the Russell, that is not good. Not good. Not good at all. And that would be a pretty major bottoming area broken. Okay, now not watching for these targets in the short term, but the next major target would be 1600 down, and I'd watch for rollover plays. This is why the Russell is something I'm really looking for with key support coming in here. But this has been weak like the Dow, so I'll be watching aggressively for a rollover play in the Russell. What else do we have? VIX, after spiking yesterday, is a reversal here, but I'm going to be watching on a closing basis about 1750 to see if the VIX can get below there. I'm going to raise that level a bit, about 1790 to 18, somewhere in there, for evaporating the fear from the market in a more sustained bottom. The DAX also looks like it's trying to remember to double never triggered off the table now. DAX also looks like it's trying to put in a temporary bottom. So if you're the DAX trader, watch for the close about 15,429 and the first major resistance at 15,357 area. The notes finally also coming down, spiking to the short-term harmonics and reversing up. These are getting very oversold. Key resistance here is about 107.18, the first key level with that. So again, if we were to drop down, this is hard to do projections even here because they've gone so far. It's a little easier on the yields, but the minor level would be 105.14. Again, the yields also got done 483 reversal just above there. You had this was what Sterling was talking about right here. If I can draw it correctly, the little mini head and shoulders. The little mini head and shoulders. And remember, you project it from where the neckline broke. And then you can use the same targets already. First target hit right here, second target. So again, I continue to watch for a pullback in this. That's just a little short-term thing. A little bigger thing I'm watching for the next level, about back to 4.67 to about 4.63 in the yield at least. The 10-2s, the bear steepening, getting a little pause here, but your major support is back on the adjusted chart at minus 40 basis points. Dollar index also finally reversing. We got some divergences up here, a pretty significant divergence with the RSI and price action. And remember, weekly cycles have been pinned, and look at this massive run. So I'm more watching for, at least over the next couple weeks, for a potential pullback to the weekly rotation zone, which would alleviate some pressure and possibly give more of that rally to the equities. Crude, right now we're below the daily. We're coming back down to the weekly. I'm watching for some key support in front of this 84 area. 84 to about 86 is my key support zone I am watching for. If we're looking on the little short-term harmonics, I got to re-anchor stuff. Little short-term harmonics, 85.94 and this 83.76 area is my key support zone that I'm watching for a crude pullback in. Being patient. Natty gas, keep an eye on this. This is above that 3 mark again and trying to finally chip away. See if it can finally get some breakout going, or if this resistance is still holding. Nothing yet on gold. I'm watching for a short-term bottoming area on gold, but that would at least only be a bounce play for now. What else? What else? What else? Yeah, the notes bounced right at the low from January 22nd, 2007 in the Wayback Machine. Let's peek at Sterling. Put in URA real quick, and it did have the double top, which was triggered yesterday. Could pull back really nice to the 50. So for all your uranium traders, that was a great area to put a short-term stop, because also uranium, I don't care if you don't trade some of these things, just watch this for analysis point of view, because we got way overdone. This could easily come back to even 24 without doing anything destructive to the major bull market or major short-term bull in uranium. Spiders and the Qs, the spidey senses, since we don't use the pre-market data, it does still technically have a double in here, but it would need that close above 427.48. Your short-term levels in the spiders. Why did my anchor go off again? Your short-term level in the spiders would be 426.02, and then on a closing basis, 427.47 for the sustained bull case. The other thing to trigger the double, you need a close above the 431.85. If we roll back down, you can see where the 200 is, and in relation to this 419. So pay attention to that area right there. We're also coming off roughly on the first target from the sloppy head and shoulders. So the next major target still lowers 413. If it rolls over today, the targets I'm looking at, we're trading 422. Shorter term, we have 423.11, 424.50, 421.64 is the first level of support, then 420.18, then about 419.22. Okay, the Qs, you still have the little potential double. The Qs on the short term, like right now, looks 355.90 on the little short term area to watch for. First area would be about 356.90, then 358.11 is major resistance, and on a closing basis, 359.32. As I said, could be the front run area if you're looking for that double to trigger. Not trading advice, but just trying to teach people things I will watch for if you're trying to front run a pattern. And then the key level would be 362.95. To the downside, 355.70, 354.50, 353.28, and then major would be 351.42. And you can see here, even on the Qs, if we jump out to the bigger retracements, the double would only take us between the 50 and the 62.5 on the bigger retracement before another potential rollover play. And you have the same kind of setup with a major declining trend line. So keep that in mind. Tesla still caught in the consolidation range. Remember, their earnings are on the 18th, so a couple weeks away, exactly 2 weeks away from today. Breakouts above 253, breakdowns below 237. Other than that, it's choppy trading. And those are short-term breakouts or breakdowns. Unless we close below 237, then I'm going to be watching for at least a retest of the 200. NVIDIA, after running up, we might take a pause here. The major level for me is 405. The only thing that I'd be short-term bullish on is above a close above 467.84. We had Apple down a bit, but it looks like it's trying to at least get a short-term bottoming area in here. We're trading 170, 171.36. Let's just see what it would need to qualify for a double. 169.29. So if we roll back down there and then that area can hold, we could be setting up for a little mini bottoming pattern in Apple. Close to the 200, but not yet there. Meta still holding in there. Oh, Meta. Are you ever going to get anywhere beyond the first target with the double? Oh, so we'll just keeping an eye on there. Let's see. Looks like the meme stock traders have run out of free Trump Biden bucks to buy the dips. Maybe that's why we haven't seen Coco for a while. He'll come in when we get the Coco will be. Don't worry, Coco will pop in. Coco will pop in after we've had a couple days of rallies, and he'll say all-time highs. And I'm not going to disagree that we won't rally. I'm watching for that rally to set up, but it's all-time highs would be a lot of heavy lifting for this market, especially in these conditions. And we are getting into a time, especially starting mid-October, where we get to the more of the year-end rally starting to kick in. Now, I don't think it's going to go fully through the whole year-end. I think it's going to cut out early. But, you know, it's a very strong seasonal tendency. Would I sit here and fight it? No, but I'll be watching for rollover patterns. Excuse me. Yeah, thanks. Apple downgraded by KeyBank. That's that's very, very minor. Very, very minor. So, again, this market is starting to act a little more exhausted. We're getting some key reversals in crude. We're getting the dollar. We're getting the pullback in the yields. So would not be surprised to see the equities finding at least a potential short-term base over the next couple days with non-farm payrolls coming in on Friday. With that, I will see everyone again tomorrow. Have a wonderful trading day. Bye for now.